Hurricane Harvey devastates Texas, and North Korea shoots a missile over Japan. But investors in love, again celebrating. This tax plan? More about that when we start the show.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week. And hopefully, that's a lot of great ideas and opportunities for you throughout the show. Well, the stock market roared to life again this week after what was a big head fake on Tuesday morning. News that North Korea had shot a missile over Japan really scared the markets overnight. We saw a very large dip, but then stocks recovered and bulls never looked back the whole week after that Tuesday overnight decline. Hurricane Harvey certainly was in the news with just absolutely devastation there in southeast Texas and moving into Louisiana. However, some news out of that was that there was some hope that the debt ceiling would get raised. There would be no crisis because they want to pass a relief bill. So they thought maybe that would make things easier. That helped the bulls get some hope. Also, big help came as the Trump administration was out there talking up tax reform. And of course, they need to get the Dems on board to pass this thing, unless they do it 100% deficit neutral. So that means that they have to convince investors, or they have already convinced, that 1 minus 1 is greater than 0. Which doesn't make a lot of sense, does it? So when they come up with a tax reform bill that is deficit neutral, they're simply going to raise taxes in one place, cut them in other places, and you can tell me how that is stimulating the economy? I don't exactly get it, but that's not tax reform. That's just playing around with the tax code and maybe going to cut some taxes and maybe going to repatriate the corporate taxes. But we don't know if any of that can get done at all. We don't know if they can get any Democratic votes at all. So all of this celebration going on is again celebrating the same thing that probably can't even happen. So you really have to look deep into that one. And we're going to see a lot more coming out soon on this tax reform. And the market gets a big lift out of Apple, which like 4 days in a row moved to all-time highs. Some giant moves in there that came once they said that they had their product launch event scheduled for September 12th, and that woke up the buyers in there, and Apple pushed the NASDAQ up. It was a big recovery for the NASDAQ, and just in the blink of an eye, 4 weeks of correction pretty much gone in like 4 days on the upside, which is certainly the nature of a bullish market, and it's really strong. So the Russell is really the only one that is still very far from its all-time high out of all of the major indexes, and that one, the Russell, came on pretty strongly at the end of the week also. For the stock market, the NASDAQ and the Russell both up over 2% on the week. The S&P 500 up about over 1%, maybe 1.5%, and the Dow Jones Industrial average up about 1%. Also, transportation also got a lift, but struggling as the airline stocks have been very heavy. Rails also, as the hurricane has really put some question around earnings on the airline stock. So, but big recoveries here in the indexes and very solid, steady buying since Tuesday. I'm going to show you that as we look at our 60-minute chart of the S&P 500. You can see right there, after that really big Tuesday dip that you see right there, the market did recover. So the news came out over here over Sunday night about the devastation in Texas from Hurricane Harvey, and the dollar cracked to the downside. Gold and silver broke out that day, so we had kind of a choppy day right in here. And then overnight some news came out about North Korea shooting the missile over Japan, and the president came out and said that he would withhold the deficit ceiling, might even shut down the government if he didn't get funding for the wall. So the combination of those things really sent stocks down overnight, but you could see the recovery in here. Apple heavy buying came in, moves to an all-time high. NASDAQ recovers 70 points off its low, and people start to be less worried about North Korea, and the tax plan talk starts to heat up. You see, you get this big move right in here. Here you get GDP after a little pullback here overnight. GDP comes out at a 3% rate. Biotechs really started to move up on a deal that Gilead is buying Kite. So that was a big move on the upside for biotechs, which continued throughout the week. And Steele's had a big move also. Again, POTUS out there touting his tax plan. Big move up here on Wednesday. Big move up here on Thursday. Europe warns about or talks about a stronger inflation. That should be kind of good news. And then in retaliation, the U.S. and Japan get together and fly 8 jets over the North Korean peninsula. And just to show you want to do something like that, shoot over Japan, well, we're going to show you what our strength looks like. If you ask me, they should line up the U.S. and Japan should line up boats around North Korea, and if they shoot off one more missile, we should shoot it down. That's how I feel about that. Then on Thursday, we get more excitement about taxes, and the tax plan should come out within a few weeks, is what the administration is saying, so we get more strength there. Apple lifts the market again. Energy futures surged on these pipeline shutdown and refiner shutdowns that we don't know when they're going to start up again. So gasoline had a huge move up in the week. I'll talk a little bit about that coming up. Payrolls up only 156,000 K. It was expected to be stronger on Friday, and you could see that the stock market's still going up. So 1, 2, 3, and 4 days right in here off of that panic low, and the stock market just shows you that it is still super strong. So that is a look at our 60-minute chart of the the S&P 500. So the stock market, you know, the bulls caught the fever again, and it seems like they celebrate this tax reform over and over again. I've seen periods like this. Don't forget, I've been a trader for 43 years, and I've seen lots of markets that it looks like they'll never tick down, and at the same time, lots of people out there talking about you can't ever get a 3% correction. We have now, it's the second longest time in history that we have not seen a 3% correction. So I get emails and tweets and stuff like that you know, while Trump is in here, or while these central banks have control, we're never going to see a correction. And that's the kind of language that really does bring some sharp corrections, because all the bulls get all in. That's essentially what happens. Usually when you get into these periods of extreme confidence by the bulls and of massive frustration by the bears, it ends in some ugliness. And I expect that that's going to happen sometime soon. For my bigger term perspective, for my subscribers, they've seen me talk about the upcoming correction that I think is going to be pretty strong. Now, we're in an intermediate period right in here where I think the stock market could get further lift, and we're looking at stocks maybe being okay for the next month or so, but watch out for that fourth quarter. Right now, I would give the same odds to 2% new high, 2% over the last high, versus a 10% correction in the market. Same odds on that? Well, let me know what you think about that. I know there's going to be mixed opinions. So that's it for our opening segment. We're going to be right back with our best and worst stocks for the week. All right, so for the best stocks for the week, we are going to look at the gold and silver stocks. They had some pretty good up moves. We'll look at a couple of those. I have been featuring those stocks a lot in some recent discussions and in some videos on these stocks that have been just super strong. We had a breakout in the gold and silver market, and those brought some just huge moves on the upside in the gold stocks. Some of them were really lagging in gold stocks, and now they have come to life. So take a look here as we look at AU. AU is a stock that has really languished, and you could see in here our cycle analysis, and this has projected to a week period. You see these two blue spikes down over here. They were projecting to that low that you see come right in here and then turn up. Now this is really catching up. So a 10% gain on the week, one of the weakest stocks in this gold category, gets a pretty big move. Take a look at AG. So 10% gain there and a 6% gain here. This is pretty similar in that we were expecting that low to come right over here, and you could see our cycle analysis said that you see this cycle right in here and this cycle right in here points to this low timing and the low coming right in there. So that is the time that we expected it to pick up. This is stocks trading around 7, coming up from around 6, and we think it's probably going to head up to 8, as you could see our projection. But it's going to have to prove itself to not get caught up in any kind of a declining period out over here. Need to get up above these highs over here, so it need to get over 940 to be that good, and we think that that's not that likely. But we have a target in here above $8, and that is pretty good. The biotechs, as I said, got some good upside move as Gilead buys Kite Pharmaceutical. That really got investors interested. Take a look in here as you see this upside move. What a move in there, right? The stock comes up from 65 to 83 in the last couple of months. This black line right over there is the cycle, and you could see the cyclic patterns in there as I trace that out for you. So this is the ideal cycle, and you see the low and the sell-off lines right up here, the low and the sell-off lines right up here, and the bullish cycle that comes right up to that 50% extension. So you could see our projection in here says maybe the stock gets up to this fib confluence area around 87, but then rolls over for a correction. We think it's probably a choppier time right in here. But analysts basically, even though some say they overpaid, overall are excited about them buying Kite Pharmaceutical, and that has given a lift to the group. Amgen, AMGN, is one that we saw as likely to roll over right around that moving average. We put in a negative setup in there, and that proved to be wrong as it broke up through resistance. We still think it's going to roll over into a corrective period into this support zone. We think this buying in here is getting overdone, but a good solid 3.7% up move on the week, and that is a good recovery in that stock. So we just look for a bit of a pullback in there, maybe down to 172 to 175, and then it's probably going to be in good shape again as we have it projected right over there. Celgene also in this category, up about 6% as the group really caught fire. Steel stocks were also strong. Now, U.S. Steel is one that we have liked. It's been in a positive upside move, and we think that that has come up to some resistance area that you can see right in here. Now, this one has our colored phasing in there. So when it's green phase, it's a rising phase. When it's yellow, it's a corrective phase. And when you see it red like this, it had a breakdown and it moves into a declining phase. You could see how that works. Now, when you see this big break like you see right over here, and this rising cycle phase only get up to the 38, you got to be a little skeptical about that. That's the 38.2% fib resistance there. We're kind of looking for a pullback in here and then another rally. Maybe it can get up to 30 up there in the next move, but overall the big picture on this is not all that good. The big move, of course, came on the Donald Trump election and the hope for using a lot of U.S. steel in the infrastructure rebuilding, but so far there's nothing getting passed on that. So this one looks to us like it's going to stall here between 27.5 and 30, somewhere in there, and it might be closer to 27.5 here, and then get into some corrective phase. AK Steel up 6% on the week. We think that one's going to bottom soon. And we have ATI in the steel category up about 6%, and that one actually looks like it has a shot to the upside up to about 24. So that's all the stocks that moved up very much during this strong week. Surprisingly, there was not a lot more good stocks on the upside than we saw. And right now, take a look at the worst stocks for the week. So for the worst stocks for the week, seemingly we keep dipping into the retail category in order to get to this. The worst stock for the week in the 300 plus stocks that we follow was a Best Buy, BBY. Now, you can learn a lot about cycle analysis when you look at this chart. Again, we have our colored phasing in here. And you can see that in these last cycles in here. I'm just going to go a little bit further out so you can see right here. So here's what you can learn about cycle analysis in this chart. So you could see here that there was a higher bottom right in here, and then a higher bottom right in here, and each of those were higher peaks. That makes the upside channel that you see right in here, and that was a beautiful upside move. Now, it looks like we're still above that channel, so some might say, well, that still looks bullish. I don't see it that way, and I'm going to teach you why as far as cycles go. So here is the 1 cycle, 2 cycles, 3 cycles, 4 cycles. All of them in what we call right-hand translations that give you the right side of each cycle having a modest correction in them. And then when you get into the rising phase, the green zone, you get big upside moves. Now something changed in here, and that is that this big decline right in here, getting underneath these moving averages, has all this time to go. So in other words, that establishes a declining phase, and once it gets underneath this low around 53 bucks, that's going to turn this red. So essentially this right over here now ends that green upside phase. We have right in here this yellow zone shaping up, and if it gets underneath this right over here, that's going to put up our first red zone in nearly 2 years. So this is bad. You see the big break right down over there. Earnings were good, guidance was okay, but the CEO came out and said strong sales were not the new normal, and he really was downplaying the future in there, and that says that he doesn't think they're going to compete that well in online. So you can see in here on the daily, we're getting down close to that low as we did on the weekly, and our projection suggests that this is going to continue going to the downside. In addition to that, we had all this positive momentum going on. You could see it all during this period right in here. There's the green arrow. And now, as of 2 days ago, the momentum in here goes negative, and this is really a bad sign. So Best Buy, this looks incredibly ugly when you see that side by side on the left and on the right, and that says to us that the new normal for this stock may be a declining stock. Were we to see a bounce in here, we think it is an outright sale. Sienna, let's stay in the retail for a second, then we're going to look at Sienna. Dollar General is the next one we're going to put up right in here. And there is the cyclic patterns in here. Now, you could see the breakdown in this big red side bar. Now, what's different about this from what we see in Best Buy is that this comes to the downside late in the cyclical pattern. It's still above those lows in here, and it has maybe 2-3 more weeks to go in here before it then turns back up. Now, we have it turning up in a modest way. You can see that. It could actually be better than that, and this is kind of anomalous. And what's anomalous about it is that this is all about Hurricane Harvey, and they're not sure about how negatively the hurricane is going to be affecting Dollar General. I think when you get a pattern like this, where you had basically a positive cycle here, a little bit of a negative cycle right in here, and another kind of neutral right in here, pretty good chance that when they start talking about the rebuilding and rebuying, that this is going to get optimistic and maybe get a bigger move up in here. I think in the next 2-3 weeks that the concerns are going to be overblown and that this stock is going to be moving up again. I think if you buy it around 70, I think you're going to see it jump up towards 80 again. So I'm really liking this one in there, and I consider it to be a buy in these next couple weeks. Under Armour, UA, you can see it's down 6% on the week. And it's actually UAA, sorry about that, because they had that split off. And here you can see this one has till sometime around the end of September before that low is due. And this has been in negative momentum. This pattern has suggested it was going to continue to the downside. When you look at the daily pattern right in here, you can see that this is the bottoming spot right there, and you can see the bottoming spot right here where it got very oversold. That's on our option bias indicator right there that said it was likely to get a bounce. And you could actually, that's this one right over here. This one was on 8.2. We'll just move those a little closer for you to see. And you got the bounce there. You got a bounce right in here, but it was still in this really negative momentum. The slim ribbon turned negative right over here. You could see that around just around 20 bucks, and here it comes down to under 16. So still negative momentum. We're likely to get a bounce in here that's small, but again, this goes out to the end of September before that's over with. So I think buying Under Armour right now is a mistake, and it's likely to keep moving to the downside. Take a look at Sienna, CIEN. Their earnings beat, but their guidance disappointed. Let's blow this up for you to see. And here is, this suggests a major top. So you see this low here is just lower than this over here. It had 2 cycles in a row where you have positive formation, this one here, and now the bottom due in here, and then likely to get a rally. So we're looking for a bottom right in here, but then it is likely to fail up here. That probably takes you up about 4 to 6 weeks, and then roll over again. We'll have a resistance zone established in there once we make this bottom. But take a look at this big downside gap on those earnings on that high volume. It's hard to recover off of that. It'll take a little time. Maybe it gets up here to $23 where you see this declining slim ribbon. Note that the momentum got you negative here. In other words, negative momentum just under the $25 number, and then you see that big break that happened right then. So it's pretty important to be looking at momentum when you see that, right? Take a look at SAVE. I talked a lot about the airlines in this last week. I'll say a little bit more about that. So the airlines pretty weak, and you could see we're at the spot that we expect to see a bounce in here. This is Spirit Airlines right at the spot where we expect a low, and you could see each time you get around those cyclical low periods, like right here and right here and right here, it was followed by a rally and then a rally and then a rally. You can see that, and here's the rally that's due right in here, and we see Spirit Airlines down 5% on the week, however likely to get a pretty good bounce in there over the coming weeks. And we think for speculative type investor traders, you can probably buy this right around 32 to 34 and look for a pop into about the 40 plus area on Spirit Airlines. As far as the airlines go, we did a important video looking at some groups that we thought were candidates to get some upside moves, and our members saw that on Thursday. So become an askSlim member and you'll be able to see that video. And the one we did on Tuesday was on reviewing the gold and the gold mining stocks, and that was also a great video with great comments. So do become an askSlim member and you'll be able to see those videos. Level 2 has some 250 plus videos in there, and you can do a ton of learning. So go to the askSlim site and take a look at that. All right, so that is the worst of the week. Not a lot to look at right there, and we're going to be right back with our short-term view for the coming week. All right, short-term view for the coming week. Do this every single week. Take an accounting of what I said back in the last week, and we're going to do that right now. We look at the 5 major categories here, which are the light crude and some of the energies, the dollar or euro currency, the gold, silver, metals markets, the bond market, and of course the stock market. So always rate myself looking at pattern formations, timing of moves, and locations of moves. There's a lot of factors that we look at, and this week I'm only going to give myself about 50 to 55%. We missed the stock market because we expected the dip that came on Tuesday to continue, taking the S&P index down to 2406, and it stopped quickly and short of that really overnight, and then moved to the upside several days advance of the time that we thought the bottoming was going to come. That essentially gave dominance to a little shorter cycle pattern that we had on there as a possibility, and that gave us a lot of clarity as to the condition of the market moving forward. So the oil market was all over the place, oil and energies, due to the hurricane, with the pipeline shutdowns and refiner shutdowns, and the huge spike up in natural gas in gasoline also drove up heating oil and gave a lift to natural gas, which we were bullish on. And we talked about natural gas last week, saying that it was oversold, and we believed it was set up for an upside move. So we got that right. We said that the oil market was dangerously weak based on the fact that the hurricane had come, and it turns out that the analysis overall was that the hurricane was going to cause a slowdown in demand in oil, where you had a shortage in gasoline, so they went in different directions until oil got a bounce. Oil we thought was going to be range bound. The range was a little bit lower than we expected. So let's take a look here as we switch over. We're going to look at the light crude market, and then we're going to take a peek at some of the momentum in the different segments, different futures within these segments of the market. So here again, we're only looking at daily charts, and this one is very interesting when you look at light crude. Because you see that, well, light crude had this kind of choppy downside week. Now, there's a big cycle right in here, and there's a consistency of a smaller cycle also. When I highlight this one right here, it shows you 9 bars on average in each of the smaller cycles, and you can see that the bigger cycle here is 36 bars, so it's 4 times 9. There's a good lesson there in cycle analysis. And if you look at these lows, so in other words, this low right over here, and this low right over here, and this low right over here, so you see you have these small cycles right in here, right like this, and then this one doesn't rally very far and fails, gets under here, so you have this correction set in. Now you've rallied in this one. So in other words, this was pushing you up and this was pushing you up, but you failed in minor resistance and then rolled over and broke underneath that low. That is a bad pattern. So, you know, essentially because, and I meant to mention this, that next week I'll be on vacation, and there will be no market week show in the next week on Friday, so we're really talking about projecting out 2 weeks right in here. And let's take a look as we project out in light crude for a couple of weeks. Now, when we have this smaller cycle that you see in there, it makes it a little bit easier. Let's just take a little closer look right in here. And what this looks to us like is that since this downtrend is established by this low breaking, we have this cycle right in here that you see bottomed, and then the rally going on. It should fall short of this area right over here, so we should get into a downward stair step. So the next several weeks you could see something like this right in here, right, and then like this is what we really see. So we're going to call this a downward bias for these couple of weeks, where rallies come, they try to get to the upside and are not able to hold very well. When you look at the momentum in here, you could see light crude got oversold and then bounced. That's on the projection oscillator right here. And then the momentum turned negative. So when you see that, let's just look at another spot right there. So you see you got the momentum negative right over here. You got oversold and bounced, and when you bounced, you stayed negative. You see that's under the slim, way under the slim ribbon, and then you continued to move to the downside. So that's similar right in here, and it says to us that, you know, the market not quite as weak as we saw right over here, still has the same formation, and it looks to us like the bounce that, you know, we're getting right now is very likely to fail when we see that. So as far as anything else in here that's important to look at, heating oil is super overbought, and this huge spike in here has our option bias indicator giving this signal that it is likely to roll over. So you see that's the projection that we have right in there. Here's the momentum, and you could see it's quite overbought in here. So we're looking for a pullback in there in the heating oil market. The natural gas market, we actually expected the bounce. We were looking for upside in here. Now you could see it had that bounce. We're probably going to get a little bit of a pullback in here, but overall we're liking natural gas, and you could see natural gas overbought, likely to pull back as we said, but turned green momentum, and that is a good thing. So I wanted to look with a little more depth into the energy market because of all of this news that came out. So we think that some minor pullbacks in the products and natural gas, but they're likely to stay firm, and light crude likely to stay in this downward chop over these next couple weeks. Next one we're going to look at is the dollar and the euro. So we got this one right. We thought that it was risky, that there was going to be a breakdown in the dollar. We thought that the euro was likely to break out on the upside, and we did get that. Now the dollar has had a bit of a recovery, but still looks lousy to us when we look at this, and we think that it's going to, you know, fool around a little bit in here, maybe get a chop, but overall as you can see, the direction on these 2-cycle projections in here are to the downside. In other words, this big cycle projecting is the dotted line. This dashed one right over here is this dashed line here. And what that says is that maybe you could move sideways to a little bit up here for a week or so, but we expect that it's going to roll over after that and then start to decline pretty sharply. So that's a pretty good sign when you look at gold, which trades contrary to this, being bullish. I'll show you that in one moment. Here you could see this incredible weakness in the dollar, and it gets up here to this overbought area, still under the slim ribbon in red, and that has been a signal that it's going to fall again. So it's pretty hard to get bullish when you look at that pattern right there. We think the dollar will remain weak. When you look at the euro currency /6E, we got this pop to the upside right in here. Now it got into those fib extensions and backed off. So we're kind of establishing a range. We thought the dollar was going to be moving sideways and then down. We think this is going to be moving sideways and then up. So we could get a week and a half of this sideways chop. We think that this right over here is pretty much the range. Now we put these important numbers in here because if these numbers break, then at 117.70 under there, you get a little cautious in here that it's given up too much ground, and that the situation for the dollar might be not as bad for the very near term. If you break under here, this last low where I have that marked off, and this little note you can see below this level is negative and changes the super negative scenario for the dollar, you'd have to get under 116.77 to be suspicious about that. So I wanted to put these in for our viewers so that you can, who are trading the dollar and the euro and currencies, to have some sense around that. Because if the euro broke under here, then the scenario for gold wouldn't be as powerful as I think it is right now. I think breaking down is a very low probability, and I think the highest probability is that this just kind of spikes up over here, moves down again one more time, and then has that move right in there. So it looks something like this. You see it hits support, it has another move up, curls down, and then moves up. That's pretty much what I said right here. So I don't think it's going to break down, and I think it's looking super powerful. And you could see, look at that upside momentum, and you see we're getting oversold in the euro now as we're still solid green here, and that really is a bullish case. Bearish for the dollar, bullish for the euro, and we really are suspicious that it's just some choppy sideways action, eventually resolving itself to give us a further dollar break and a further lift in the euro and other currencies. We're really liking the Japanese yen. Pretty soon, watch our Future Speak video on Wednesday for our members when we go over 23 different futures contracts, and you will see in there our bigger picture analysis on the euro currency, on all the currencies, and on the Japanese currency, which we think is got a little, maybe a couple weeks here, but then we're going to like it. So now we're going to switch over and look at the gold market /GC. We said last week that we thought that it was going to chop around a little bit, but then break out on the upside. We have been cautioning that the upside is where the risk is. In other words, it could likely move strongly to the upside, and we saw that happen, and it continues to look very strong in here. So take a look right here as we look at the gold market. You can see it gets up here into this fib extension area right there. Let's take a little closer look so you can see it more clearly. Trades up to 1334. Now note the dotted line in here right there. So what that is tracing out is this cycle right in here. You can see that that's the smaller of the two cycles. That's gold right here. This is the GDX, this is silver. So this period right in here is a little bit of a corrective period where you see these declines right there, or the projected lows in that period. So we basically see gold and silver, or GDX, all of that kind of chopping around in here a little bit. If gold got down in here to about 13, 14 or a little bit lower, that to us is a screaming buy zone. it may not be able to get down that far in this corrective period in here, but you see it dips right down there to the number 2 days ago and then explodes to the upside. So why couldn't it just come down there one more time? We think that would be a fantastic buying opportunity over the next couple of weeks, and then very likely to see surges to new highs beyond that. So that's a look at gold. You could see in here the momentum in gold is solid. Let's just switch over to silver, so you could see that also, and the momentum in silver is solid. Copper got pretty overbought, and we think it is probably going to give you a little bit of a turn pretty soon, but you could see that is very solid also. And platinum, you can see also super solid. So all of these looking really good. Let's just take a look here. That's the platinum market. You can see it's popping its head over that little corrective area that we thought we saw, and we still think it's going to pull back for a few days. And silver /SI, here's that little corrective period here. This is the buy zone, 1718 down to about 1701. We think if you get a pullback in here, it's going to be a super opportunity and then pop back to the upside. So here's your two cycles in here. The small one bottoms here, pops up. It's supposed to bottom in here in a few days and then pop up. So we think that little corrective period here and then moving sharply to the upside. We are not tempering at all our bullish stance on these metals. We think that they are super good, and if anything, the surprise is going to be to the upside, that maybe we've been conservative in our upside projections. Again, watch our Future Speak video to see that. So now we're going to switch over and look at the bond market. Now, this is looking at the bond market really has me in a quandary when you look at what's going on in bonds versus what's going on in the stock market. The reason I say that is because the bond market's been super strong. It's pulling back here on Friday after having a big week, and that says to us that there is buyers here in the bond market that somehow don't believe the Fed is going to be able to raise much, or that believe that there's going to be some reason to be in some area of safety. So the bond market's been just incredibly strong. We expected it was going to pull back into this time period, and it's basically barely giving you any pullback, and actually looking like in the next couple days it could start to rally again. So take a look here as you look at the ZBs. Now, this is the rolled contract. We had said that in the next couple of weeks that we thought that the ZBs would pop up to 158. Now the contract rolled, so our upside projection is different. We think we're going to get back over the 157 plus area after this little corrective period is over. We're now in this support. I think 154.10 to 155.10 in that 1 point range is a buy area, and that you're likely to move up again. So you can see in here the multiple cyclical patterns in here that show that this is really where the cycles are supposed to bottom and then turn up. So this is really a buy timing for us, and we could see the bond market turning right back up again in a few days. So 157 plus is our upside target for the next couple of weeks in the ZBs. That's a couple of points. When we look at the ZNs, that's the 10-year. You can see the same pattern, and here the bottom forming. This is kind of our nested lows right there, and when you look at the last time all of those lows nested was right over here. You got that big upside move. So again, a few days in here, we think that it's a buy in this support zone that's right there, 126.21 to 126.08, and then spurting up with an upside target of 127.11 plus over these next couple weeks. We say plus because we're not really sure. There's a lot more room on the intermediate patterns, but these patterns without having much of a dip show you a lot of strength in there. Look at this upside momentum in there, getting oversold right now, right in here. What happens each time it's green and gets oversold? Like right over here, you got rallied. Right over here, you got rallied. Look back over here during this positive momentum period, more rally, more rally. That was great. It turns red here, right? And that gives you an indication that you're in a corrective period. So we're not in that right now. We're in a positive period, and all indications in there that it's going to go further to the upside. Here's the bond market here. Oversold, it's green, and of course everything we talk about is probabilities. So we look at these patterns, we look at the momentum, we look at a lot of studies, and we try to take the sum of the evidence and come up with what we think are the strongest probabilities. So we did that in gold. We saw the strongest probabilities to the breakout on the upside. We saw that in the dollar. The strongest probabilities are the breakdowns to the downside. Most of that follows, but we're not going to always get it right. We try for 2/3 right because we think it's great. This week was because of the stock market and I think affected by the hurricane. We did not do as well at about 50 to 55%. So let's take a look at the stock market in here and take a look at our, we'll call them revised cyclical patterns that we think have a lot better information on them now that we have had this market bottom come in. So when you, there's some great information in here that we learned off of this Tuesday bottom. So first of all, I want you to note that the support at the 89-day moving average right over here was solid. You had the same thing happen here last Tuesday on that big downside day. And this 16-day pattern, there's a 15 right there, 16, 16. You could see as we've recounted it and reset those patterns, that's really where the cycle is. And it showed that to us this week as we knew that we would get some sense around these lows as to what was the dominant pattern. And there it is right there. So this rally right in here comes strongly at the bottom of an intermediate pattern of high risk. That period of extreme risk that we had labeled had ended. And so the amount of decline in there was shockingly low. That the market was this strong, and then you get this strong rally, you know, very close to the all-time highs again, and that shows you the strength. So that if that's the case, and we believe the intermediate pattern is now in an uptrend that we think has got some weeks to go, then you really have this kind of a channel or pattern going up right in there that you can see. Now, the way this pattern looks is that this is a 16-day cycle right there. And this is the 9th day off of that low, 9th or 10th day. So that says to us that we have about 5, 6, 7 days of correction in here. We're going to call the time that we're away these next couple weeks down and then up. You can see that. That's really what we're looking for. So we don't think that we're going to take out the highs on this one. We think we're going to challenge or maybe just take out the highs on that next one over there. And then this is like a 3-4 week period in here. And we think overall that that probably is going to be the end of it. We don't think that there's a big upside breakout coming in here, but just some really choppy period where the intermediate phase runs itself out and runs into a longer term corrective period that we think is going to hit hard in the 4th quarter, as I said earlier in the show. So we're going to call the next 2 weeks down for a week and then up right over there, and that probably is challenging or taking out the highs. Were this correction to be more shallow, then you'd expect this to be a little bit higher. Were this correction to be much steeper while we're away, which is not likely, then it would set up a more negative pattern like this. So you can learn a lot about that. Right now we consider this to be the buy zone over the next week, 24.57 to around 24.48 down here, as that's some really good support. When you look here at the in this corrective period, you can see we turned red, but now the S&P 500 has turned green. You can see that right there. So showing you that the momentum has reestablished to the upside. NASDAQ NDX has done the same thing. The Dow Jones Industrial Average has done the same thing, though overbought. You can see that they have gotten overbought. So that's why we're looking for the pullback. SPX very overbought when you look at that, so we're looking for the pullback in the next week. The Russell, you can see, is the only one that has not turned green yet, and that is overbought also and rolling over. So, you know, pretty good sign that the next week could bring some downside corrections in there. And again, we like that buy zone. Take a look at the Russell, and here you could see the Russell has stalled here in this resistance area, and this is the real weak sister in there. As far as that goes, though it's had a big recovery in this last week, it still is only in that area, which shows you that it is the weakest one. Still, there's that pattern that says for a week likely pulling to the downside. When you look at the NASDAQ and the X, you could see the same thing, gets up to this cycle peak resistance and a new high. So the NASDAQ is the only one that's made a new high, but when you see that happen, it pretty much gives you a sense the S&P 500 is probably going to do the same thing. Again, we think it's after the correction and then the next rally. So you can see the same pattern right in here. And we, again, think that if you get a pullback in here over this next week, that it's going to be a buy. Certainly if it gets underneath this rising support zone around 5,900, that would be a pretty good size pullback in there. That rising zone is probably a little bit higher right now because we made the new high. And just a little free peek here on the weekly. You could see that weekly turning up, and it's just the first week. And usually when you get that, you have more to come. So we believe that it's going to have several more weeks, and that's really what we're projecting in here is a corrective week, and then another up week following that. And the short-term momentum, they're overbought. It's likely to get a pullback, and that's probably going to be a buying opportunity for the short-term traders. One thing I want to bring in here is our MCI, market condition indicator, because I was trying to show this the other day and I couldn't quite get it pulled up. There was an error in the script that I had to fix. And so for our level 4 members, they get our market condition indicator, and you can get a little lesson off this right over here, and that was very clearly the Russell was the weakest, and you could see in here that weak move right in the indicator getting down here to like minus 90 something. Now the key is that if it's really strong and there's no major breakdown, you come down in between the 25 and minus 25. We call that the swing zone. And if you do that and you move back up out of the swing zone, it did it there in the S&P 500. It did it in the NASDAQ. The Dow couldn't even get into the swing zone and then turned up again, but the Russell was clearly the weakest. Man, you get a ton of information out of this, and what this all means is that the intermediate and longer term momentum factors that are built into here were still positive, and that they were not giving ground, so you were just having a short-term correction, and then you get up above the swing zone, and that confirms when you get above the 25 again that it is a resumption on the upside, and that's clearly what we have. So this works on everything, and you have to become a 3-month level 4 subscriber and get our charts in order to be able to get that. So that just shows you the super strength in the MCI that matches this right over here, which is the looking at the slim ribbon, which shows you the intraday strength and how that strength and weakness, and how interestingly when it turned up over here, which was on that Tuesday, this turned up actually on Monday, that there was some sign that we were getting positive again, and you can see the intraday momentum right in here. So all of the intraday indicators in momentum on the stock market and the market condition indicator all showing that pretty good strength, and the fact that the MCI turned up where it did shows us that the longer term factors that are built into it are really strong. So that is the look at the indicators that I like to use that are our proprietary indicators or indicators that we share, and I think that they're really valuable. One last look here at the market before we sign off for actually 2 weeks as we go on vacation, as we have the stock market gaining basically over 2% on the week for the major indexes. The bond market, a few ticks up or down. It was pretty much close to unchanged after giving up gains on Friday. The gold and silver markets breakouts, as we had warned, $30 to the upside plus on gold, silver more than 50 cents to the upside. And after some modest corrections, we think there's more to that coming also. And the oil market just zigging up and down with the other energies much stronger based on the situation of devastation in Texas and Louisiana. And no telling right now when any of that stuff is going to open up. President tapped the SPR and to give some relief there, and that hurt the oil market also. So that's going to take a little while yet to clear up. And overall, it was a very interesting week with lots going on. I hope you had a great week. I hope this information was valuable to you. I'll be away next week again, so there will be no video on no market week video on September 8th for all of our members. You received emails regarding our holiday schedule, and I will see you in a couple of weeks. And I'm always wishing you great trading.
Well, I'm going to say